What's good everyone, welcome back to another video on the YouTube channel, and this video I'm going to teach you guys how you can trade distributions. So distributions is very key in my trading because that is all I'm looking for, and in this video I'm going to teach you guys how you can find the low risk sell and buy. I'm going to go over the first distribution and then I'm going to give you guys some insights on the silver bullet. Before we get into the video, I want to let you guys know that recently I have shared my trading results from May into June, and I shared my full P&L and the trades that I took. It was across 3 accounts and I made over $18,000. I have posted that inside of my Telegram group and on the community tab on my YouTube channel. So I posted this and I revealed my face if you guys follow me on Instagram or you guys watch my YouTube shorts. I did reveal my face to you guys. This is because I want to show an extra transparency to you guys. The guy that is making these educational videos, I want you guys to know that he makes money himself from trading. So I showed you guys my recent results from May to the end of June, and at the end of the third quarter I will release some more P&L. So I don't owe this to anyone, I'm just showing it for extra transparency that losses in trading are inevitable. Everyone loses and everyone that is profitable does take losing trades. If you guys do want to find out more, there is a link to my Telegram group in the comments down below. And if you guys are new to my channel and you've never heard about distributions before, I do have a full video on market maker models. So this is what the foundation of this video will be on, and then we will build on it in the second part. So the first part of the video that you guys are watching now, this is a beginner's video, and the second video will be a much more advanced video because I do know that most of you guys follow me for the advanced teachings and you guys want to learn more in depth about the market themselves. So the second video will go into much more detail. However, this video will be in detail and it will clear up some questions for you. So all of that being said, let's get into the video. Okay, so for you guys to be able to trade distributions and trade the distribution legs inside of the market, you guys need to understand what it is by its definition. So if I can't explain to you what something is by its definition, I fully don't understand what it is. Just like every single one of my videos or the topics that we go over, I teach you guys what the definition is to every single concept. So distributions by definition is where smart money have already accumulated positions, distribute or offset distribute into buy or sell orders. And this is where market maker models will be used to our advantage. So the market maker models are market maker buy or sell. I do have a video on my channel that you guys can check out. It will be pinged on the screen right now. And I also have a video on T-Trade's channel that I do go over in much more detail about the market maker models. So that will all be in the description down below. So the first form of a distribution that you guys need to be aware of is the low risk buy or low risk sell. So the first example that we are going to go over is the low risk buy. This is how the low risk buy will form. Price is trading lower, and this is all sell side of the curve delivery. Price trades into a higher time frame PD array or a liquidity pool. So this is what you're looking out for. Once we trade into the higher time frame PD array or liquidity pool, we will have a reversal. So once we have the reversal, you guys are waiting for a change in the state of delivery. And the change in the state of delivery will be when price closes above these down close candles that form here, and we trade lower, and then we will trade higher. So let's break this down. The down close candles that form in this price movement to the downside, this is where we took liquidity. So this is where high probability order blocks form. Once we take the sell side liquidity, the order blocks form here, and then we have a close above. Once we close above, price trades lower, and this is where you'll find your fair value gaps overlapping with the high probability order blocks which change the state of delivery. So this is where the low risk buy will form, and you guys can target low hanging fruit objectives. So we have a buy side liquidity pool which is right here, and this is where you guys can target for a 1-to-2 or a 1-to-1 scalping position. So if this is going over a lot of your heads watching the video right now, don't worry, I will be uploading a flowchart on my Twitter page, and towards the end of the video we will go over a chart example as well. Okay, so this is how the low risk buy forms. Let's go over the low risk sell. And this is how the low risk sell forms. Price is trading higher, and this is all buy side of the curve delivery. Price trades into a high time frame liquidity pool, and we break down lower. Once we trade into the liquidity pool or PD array, you guys are looking for up close candles in this move right here. This is where we have a change in the state of delivery. So price is going from a buy program into a sell program, and this is where you can look for shorts, and price trades back into the order blocks which change the state of delivery, and we trade into a fair value gap, and then we trade lower. And this is how a low risk sell is formed. So you guys are waiting for price to trade into a high time frame liquidity pool, which is right here, or a PD array. Once we have the reversal, you guys missed a reversal, you look for a confirmation. So the confirmation is once we change the state of delivery, we close below the order blocks right here. We look for an entry inside of the fair value gap. We will sell short right here, and our stop loss will go above this high. And if you look at this from a market structure standpoint, we have a short-term high right here, a long-term high into a liquidity pool or a PD array. Then we have a short-term high, which should offer distribution. So the second part of the video that I will upload in the next week, we are going to go over advanced market structure as well. Okay, so this is how low risk buy and sells form. Let's go over the first distribution. Okay, so this is how the first distribution forms. Price is trading lower, and this is all sell side of the curve delivery. And then we trade into the liquidity pool. We have a reversal, price trades higher, and then we trade back into the down close candles, which change the state of delivery. And once we see this, we trade into the low risk buy. Once we have the low risk buy, you will see that the first distribution forms here and price trades higher. So let's break this down. Price trades into the sell side liquidity pool. This is where we have our down close candles, and we draw them out in time. Price trades into them, and then we will find a fair value gap overlapping with the down close candles. Price trades into that, and then we have the low risk buy. So if you missed the lowest low right here, this was the reversal, and you missed the low risk buy, you will have the first distribution that we are going to get into. So these two are confirmations for the first distribution. And when you guys look to the left side of the curve, this is where you'll find your mitigation blocks. So this is where price will trade into, mitigate their orders, and then we can go higher. So this is two PD arrays overlapping. So you have confirmation from the low risk buy and reversal that the price action is bullish. Once we have this, you can look at mitigation blocks at the sell side of the curve. We will draw them out in time, and price trades into them, and we trade higher for the first distribution. And this is how I like the first distribution to form. So you're utilizing the reversal and low risk buy for confirmation. Once you have the confirmation, you can look for the first distribution, and you want to see price stop bang in the middle of the mitigation blocks on this side of the curve. Draw them out. This is where you can look for entries. So now we've gone over a bullish example for the first distribution. Let's go over the bearish example. Okay, so as you guys can see, price is trading higher, and this is all buy side of the curve delivery. Once we have this delivery, we trade into a high time frame PD array or liquidity pool, and this is where we have our reversal. Once we have our reversal, price trades lower, we have a change in the state of delivery, and we close below the order blocks. Low risk sell happens, and then we have the first distribution. So this is extra confirmation for us, and let's break this down. We take the liquidity, the up close candles which formed in this move, they will support price to go lower, and we draw them out, and price should trade into them. And once we respect them, we can look for fair value gaps to enter from on the low risk sell. If we miss the low risk sell, the first distribution is where we will look to enter. The mitigation blocks will form here. We will draw them out in time. Price will trade into the mitigation blocks, and this is where we are looking for a sell. If we have a fair value gap overlapping, we have a high probability PD array right here. So we have a fair value gap with a mitigation block. Another thing that you guys can look out for is 3 PD arrays overlapping at a entry. So for example, if we have a fair value gap which forms here, so this was a bullish gap, and now we have a bearish gap. This now becomes a strong PD array because this is an inversion. And then we have mitigation blocks. So you have 3 PD arrays that are coming together to support the market to go lower. And this is how the first distribution forms. Let's go over the silver bullet, which is the highest probability entry technique inside of the market. Okay, so let's go over a bearish example for the silver bullet. So we have price trading into a liquidity pool. Once we trade into the liquidity pool, we trade away, and the low risk buy forms. So I want you guys to listen up closely. The silver bullet only forms once we close above the breaker when we are bullish. So you guys can see right here, this is where our breaker will form. The up close candles right here, we have the low risk buy. So the silver bullet can only form once we close above the breaker. when we are bullish, and when we are bearish, the silver bullet only forms once we close below the breaker. So I want you guys to know that. So once we see this is extra confirmation that the market is changing its state of delivery. So if we look over here, price trades into the low risk buy. Once we have the low risk buy, we will have the first distribution. And from the first distribution, we will have the silver bullet. And the silver bullet will clear the original consolidation. So the original consolidation forms here, and this is what we will trade into, and we will clear it. Let's break this down. We take out the sell side liquidity, a breaker forms, and then we have the low risk buy. So we have a reversal, which is a confirmation that the market is changing its state of delivery. Then we have a breaker. This confirms that the silver bullet is going to form because we have closed above the breaker. And then we have the first distribution. Once you see this fractal right here, I want you guys to take a screenshot of this. So we have a breaker, price trades into the breaker, it gets respected, the low risk buy is respected, and so is the first distribution. When you see these two coming together and price is respecting it, anticipate the silver bullet. So this is the most high probability entry technique there is in the market. And once you understand how it forms and the ways that I'm teaching you guys, it will all come together and make your trading much more easier. Okay, so we've gone over a bullish example. We are going to go over a bearish example. Then we are going to go over a chart example. And after that, keep an eye out on my Telegram and Twitter page because I will be releasing a flow chart to simplify all of this for you guys. Okay, so now let's go over a bearish example. Price is trading higher, and then we trade into a higher time frame PD array and a liquidity pool. Once we trade into that, we break down and we have the low risk sell. Once we have the low risk sell, the first distribution forms, and then we have the silver bullet, which clears the original consolidation. So let's break all of this down right now. So we take the buy side liquidity out. Our bearish breakers is the down close candles that form here. We can draw this out in time as well. So once price respects the low risk sell, we are looking at the first distribution. And the first distribution, we can utilize mitigation blocks on the buy side of the curve. And we draw them out, price respects that. And then we have the silver bullet. So if you guys have missed the reversal, low risk sell, and first distribution, this is the entry that you're looking for because it is going to move the fastest to the drawn liquidity and it's going to clear out the liquidity. And it forms right here. We can utilize mitigation blocks as well. So if you guys don't know what mitigation blocks are, this is where smart money can trade into and mitigate their orders. So we have the buy side of the curve and the sell side of the curve. They'll utilize order blocks on the buy side of the curve for the sell side of the curve to mitigate their orders. And the same thing is done when we are bullish. So we have the close below the breaker, price trades into the low risk sell, first distribution, and this is where you're looking to enter, where they stop loss above the first distribution's high, or if you want a higher stop loss, you can use the low risk sell's high as well. Okay, so I showed you guys how the low risk sell and buy form, the first distribution and silver bullet. So the silver bullet is the second stage of distribution. If you go through my page and search the silver bullet, or you go through the MMXM traders page and search the silver bullet, you will find that me and him have been trading this for a while, and it is one of the highest probability entry techniques there is in the market. So if you are struggling with your trading, I would recommend utilizing this. So if you made it this far into the video, drop a gem emoji in the comments down below so I know that you watched it up until here. And now let's go over a chart example. Okay, so here I have an example of Euro CAD. You guys can see that this is a market maker buy model, but I'm going to break this down and we are going to identify the distribution entries that formed inside of this fractal. So this is the 4-hour chart, and you guys can see that we took the sell side liquidity below this low. Once we took the sell side liquidity, what are you guys waiting for? You're waiting for, when we are bullish, for price to close above down close candles. So these are the down close candles I'm using because they are consecutive and they are the beefiest down close candles before the up move that happened here. So we are utilizing these up close candles. We will draw them out in time and we will find 50%. Once we have this up close candle that closes above the down candles right here, this shows that we are changing the state of delivery, and what forms at a order block which changes its state of delivery with a fair value gap. So the low risk buy forms right here inside of the fair value gap, and you guys can see that we respect 50% of the order blocks which change the state of delivery. So once you see this, what is a second call? You guys are looking at a breaker. So this is the low, this is the high, and this is the lower low. What do? we draw out the breaker in time. So as we have closed above the breaker, what should you be thinking about automatically? You should be thinking about the silver bullet is going to form in this fractal. So we close above the breaker, and we are going to go over that soon. And you guys can see, once we trade back into the breaker, we trade away. So what is this? This is our first distribution. We have the reversal, so we missed the reversal. We missed the low risk buy. Now we have the first distribution. So you can catch this train. And if you miss this train, we are going to catch the fastest train there is, which is the silver bullet. And you can see that it forms right here inside of this fair value gap. So why am I choosing this fair value gap? So this was the last low that was made that rebalanced a fair value gap. And then we had an impulse move to the upside. Once we had the impulse move, price traded lower. So why did it trade lower? It traded lower to trade into a discount. So we traded below 50% and we traded into a fair value gap. Once we traded into there, you can see how fast we moved to the original consolidation. As I said at the start of the video, the silver bullet is where we will clear the original consolidation, which is right here. And you can see we have wiped that out and we really had no move to the downside. We just kept trading higher quickly. And now let's go over a mitigation block. So this is a mitigation block, this green candle right here. So you can use the one that is beefier as well. However, this is the mitigation block and you can see we don't violate this candle at all. We stay inside of this candle and the fair value gap right here, we trade into a discount, then we trade higher. So this is a mitigation block being used with the silver bullet. And now let's go over this again. We closed above the breaker. So initially we are thinking if we miss the first distribution, the silver bullet will provide an entry. So this is what your entry will look like. Your stop loss will go below the low that traded into the first distribution. And you will target the original consolidation, which is right here. So this is a 1 to 3 trade setup. This whole fractal right here repeats all the time. If you go back to my trade breakdowns, this is what I have been trading, and this is why all my trades look the same. If all your trades look the same, then you know you're doing something right. So with that being said, I'm going to conclude the video here. If you guys are still struggling, keep an eye out on my Telegram or my Twitter page, because I am going to break this down into even more simple part of how to trade distributions. So I hope you guys enjoyed this video and found it insightful. As always, thanks for watching.